Hello, I'm Mario Toneguzzi, taking care of business on Canada's podcast network. Joining me today is Jennifer Hunt, who is founder of Ventures with Adventures and an international real estate expert and market research analyst. Thanks for joining us today, Jennifer.
Well, thank you, Mario. As always, it's a pleasure to be here.
All right, let's talk about real estate and what you're seeing these days in Canada on the residential side. Is now a good time to invest?
Well, there's a couple of things I want to say about that. It's always a good time to invest in real estate for the long run. Get into real estate and wait. Make sure you're well capitalized. Make sure you've got a good cash flowing property, and it does very well over the long term. However, I know you're asking a different question. So, with that said, yes, now is a good time. We are seeing a market softening in terms of property values now through until 2024. So there will be opportunities to buy. And again, I don't recommend that people attempt to find the exact bottom of the market. Don't stress out about that. There was a softening, there's opportunities. Now is a good time to buy. And also interest rates are going to be, I know you're going to want to talk about that. Interest rates will still be going up. So getting in now while they're still historically low, even though they're recently very high by comparison, is not a bad strategy at all.
Okay, let's talk about those interest rates. So, how is they impacting the market these days, the residential market?
Well, certainly, as we've seen, they've been going up and up and up, and we just had the latest one just a few days ago, I guess, that in Canada where it went up again. So we're going on that direction, and it's a requirement. These interest rates, based on what occurred for all of the reasons that we got into inflation, we will be seeing, and inflation interest rates are the one of the main tools to counter inflation, and as such we will be seeing those interest rates continue to rise in order to counteract inflation. And so yeah, that is having an impact on demand. It's definitely softening the demand for markets, and for refinances also. Qualification is more challenging. That said, it's still a historically low interest rate.
Yeah.
And I mean, I don't foresee it going too high. Like, I don't think we're going to get into double digits in the near term, because Canada has so much at risk. There's so much of its GDP reliant on the real estate market, and there are so many homeowners that nobody wants everybody in default. So we've got a little bit of a cap, I would say, on what interest rates will go to.
All right, and when you're looking at interest rates as well, how does that impact, like, say, developers? People who want to build, properties out there, specifically like rental properties.
Yeah, well, it's definitely affecting construction, which is further exacerbating our housing supply, which again then is actually putting further upward pressure on rents as well as housing prices. So it's kind of a double-edged sword.
Yeah.
That said, the costs of construction have significantly come down since the sort of 2020, 2021 major government imposed restrictions in response to the COVID-19 situation. So there's a little bit of an offset there. So while interest rates are going up, and that significantly impacts holding costs for developers, however, at least there's a little relief in construction. So it's sort of off construction costs, I should say. So it's a little bit of an offset there.
Okay. Now, when you look at this country, and I know that there was a report recently by RBC, and I think the heading was something along the line, is Canada becoming a nation of renters? And you have so many different demographics out there pointing in a positive direction for the rental housing market, right? You've got immigration starting to come big time, and for the most part people rent before they own,
That's right.
and then there's other population increases, et cetera, and even the downsizing of maybe some people just go back into the rental part of it. Uh, that's pretty good news, isn't it, for if you're an investor, a real estate investor looking at the change?
Yeah, for those who are providing rental housing, in particular residential or even like multifamily apartments. I know they're commercial, however, they're residential properties in terms of the housing
Yeah.
that they provide. It is a good time to be a rental housing provider, and it will be for the foreseeable future, i.e., again, just withstanding this sort of softening in the market for the next couple of years, I expect rents to increase for the next decade. That's 10 years at
Yeah.
least. And so back to that report about, I haven't seen that specific report. However, the nation of renters is actually something that I've been researching and following very closely since about 2016. And we are on that trajectory as housing, housing prices are expensive. Qualification is even more challenging. And this is very similar to what occurs in many other countries. Canada has one of the higher home ownership percentages compared to Europe, compared to the US. So as a result, it seems a little uncomfortable for Canadians. However, that's a very normal progression for a relatively young country.
Oh, okay. And when you look at, I guess the markets, especially like Toronto and Vancouver, right? It's tough to be a homeowner in those places. So, what impact does those high prices in those markets have on consumers and consumer demand?
Yeah, well, what I'm seeing is a lot of folks who were listening to me maybe a couple of years ago, hopefully they bought condos when I told them to buy condos in downtown Vancouver and downtown Toronto.
Yeah,
And because they softened for a little while, many folks left the downtown cores. And now they're coming back. It's not quite there yet in terms of the housing prices, the condo prices, for example. They're still soft, there's still opportunity in those markets. However, what I'm seeing in terms of consumer demand and rental demand and like the retail experience is that we've got a lot of folks who are moving back into the cities and they are renting, and they're actually where it's possible, they're now purchasing outside of the cities and then renting those out. So we're seeing a return slowly. It's not quite super fast. However, we are seeing that return. However, that mix has changed. So individuals who, let's say, are interested in being a rental housing provider or even just a homeowner
yeah,
are renting in the places that they want to live. For example, downtown Vancouver, downtown Toronto,
yeah.
and they're purchasing elsewhere and renting those out. So that's how they're navigating the shifting market conditions so that they get their cake and eat it too.
Yeah, exactly. Well, thanks, Jennifer, for joining us again today.
Always a pleasure, Mario, and I'd love to provide you with more research anytime you need.
All right, wonderful. That was Jennifer Hunt, who is a founder with Ventures with Adventures and an international real estate expert and market research analyst. I'm Mario Toneguzzi, taking care of business on Canada's Podcast Network. Thanks for joining us today.